Guys, Tesla, the car company, is struggling right now. They just announced last week they are scaling back their solar business significantly and pulling back in full from some markets. Now, guys, everybody who says Tesla is not a car company, less than 5% of their revenue comes from Tesla Energy, okay? So I look at this thinking to myself, this is one area where I thought, okay, they could grow this area a lot and become something besides a car company. Whoops.
Yeah, whoops is right.
Whoops. So let's look at Tesla's chart year to date. Now, if you watch our past videos on Tesla, I've been critical of the valuation. Mo's got a Tesla. I had a Tesla. We're Tesla fanboys from a standpoint of what the car is. However, we believe in separating the company from the stock price. We viewed the Tesla stock price as massively overvalued. Let's look at it year to date. It has struggled. The high was 402 in the last 52 weeks. All-time high was 414 pretty much a year ago. And the low is 177. It's currently at 189. So it's getting close back to its low. This is a company that is selling for 8 times sales, with the vast majority of its revenue coming from cars. If you go look at other car companies, they sell for between 0.3 and 1 times sales. So between 8 and 20 times larger than is what Tesla's selling for relative to other car companies. And Tesla absolutely dominates the electric car business right now, but every car company is making headway.
All of them, and they're making pretty good headway.
Yes. I own now a Taycan. I love that car. Is the technology as good as Tesla's? No. But is the car sweet as hell? Absolutely. I like it way more than most Tesla and the Tesla I had before.
So I will say this. I've had the finish on my car with all the rattles and this and that. I can't take it. Now I will say yours, Porsche, the Mercedes, I sat in that, and I sat in the Audi. Those are all much better quality cars.
Well, yeah, because they have a history.
Technology is not as good, but the quality is not there for Tesla.
We love the car. My fiance and I absolutely love our Taycan. Is Tesla great? Absolutely. Do I think they're going to be around for a long time? Absolutely. If I were to bet, do I think they're going to be the leader in electric vehicles? Yes, I do. However, it doesn't mean you pay whatever price for the company. It is very, very possible to overpay. Tesla is down a lot, as it should be, and my guess is it has a lot more to go. There are 2 stocks in this economy, in this stock market, that we are watching to look for when we get close to a point where we're like, hey, we're probably close to a bottom. Apple and Tesla, because everybody is so hyped about both. Mo the other day wrote puts on Tesla at $50 a share. What he's saying there is he is hoping that he can buy Tesla at $50 a share at some point in the future. Our friend group thinks he was absolutely stupid. Oh, you're an idiot. You don't get it. Like, oh, it's going to go to 50. It's like, okay, that just shows we haven't gotten there yet.
And I did say to them, well, the 52-week high was 402. You would have told me at 402 if I was writing puts at 190. You would have said, you're stupid. There's no way Tesla's falling in half.
Yep.
More than half.
So we have to watch these things because Tesla's like Dell from the 90s. If you go look at Dell, there were Dell fanboys. They literally had groups of people who got together who were original investors in Dell, like random people who bought the company and were like millionaires from it. There were literally groups around the country who did this. Microsoft was the same way. They had more millionaires made per person, like I think in Bellevue, Washington, than any other area or any other company. It was crazy. But guess what? Did those things last forever? No.
Also, this is amazing to see. There's a 5 in front of their market cap.
Oh my gosh.
That is incredible to me. $595 billion.
I mean, let's look at their 8 pillars. It's absolutely terrible.
It's really bad.
Now, I will say they're growing a lot, but look at this 5-year PE, 236, and 5-year price of free cash flow, 235.
Good news is they're going to be buying back shares, so.
Oh my God. Guys, the worst thing Tesla can do is buy back shares. And overpriced companies should not buy back their shares. They're way their investors' money by doing that.
Yep, absolutely.
Now, everything is going well for the company fundamentally, but the price of the stock and the fundamentals do not match up. That's the issue you have to remember. This company is a $600 billion company. Go in the future 10 years and say, boy, how stupid was this? We paid 236 times earnings and 235 times free cash flow for a company that was $600 billion. I can understand $600 million, even $600 million company. I'd be like, boy, that's a lot to pay for that, even with a lot of growth potential. It's going to be difficult. It is currently November 14th at 10:18 a.m. Eastern time. A year from now, we'll see where Tesla stands. I just have a hard time believing it's going to be above. At some point in the future, it's going to be very, very, very low compared to today. And at some point in the future, you'll turn on our channel and you'll say, why are Paul and Mo saying they should buy Tesla? I thought these guys hated it. No, we like the company. We hate the value. Every company can be overpriced or underpriced. We just know it'll eventually happen in both directions, so we wait patiently. So what is Tesla worth? Well, let's look at the analyst estimates. Mo, are you on it right now?
This should be pretty interesting.
Okay, so they're expected to make $4 a share this year.
Okay.
But it's expected to triple. So there's a lot of growth potential here, according to analysts. And there's a good number of analysts that we pull in our data feed. That's a tripling. That's a tripling, Mo.
Tripling in 5 years?
4. 1, 2, 3, 4 years. That's big growth. Okay, what about revenue? Another tripling. Yep. Okay, this is pretty solid. Now, I will say this. If you want to assign a 20 PE, and you're going to be like, oh, 20 PE for Tesla in 4 years, that makes the company $250 a share currently. It's currently 190, sorry. 190. So you're going to get 33% over the next 4 years. That's assuming they do everything right.
Yeah.
And do this. Could they do better? Sure. But again, guys, the future is unknown. If it was as simple as us going to analyst estimates and saying, well, this is going to happen, let's just do it. Come on. So let's use our stock analyzer tool to figure this out, to see what has to happen with Tesla. I'm going to do a 10-year analysis because I do think Tesla will be around in 10 years. I do think the revenue and profit will be higher 10 years from now than they are today. The question is, can we pay a reasonable price for the company today to justify the investment? So Mo, I know this is when I put you on the spot. Let's talk about this revenue growth number, low, middle, and high. And by the way, for those of you who think I'm not a growth investor, our stock analyzer tool, very first line, revenue growth percentage. That's the most important part of any investment.
What do you think about 15 on the low end?
Go for it.
20? Actually, maybe a little higher.
I think 10 on the low end, okay. 20 in the middle.
30?
Ooh, what does 30 take it to?
So high.
So what's the current revenue?
Give me 1 second. 75 billion.
Okay, so 30. Oh boy, it would take it to $1 trillion in revenue.
That's not possible.
Well, let's put it in there.
Well, it's possible.
Just for the fun of it.
Okay.
Let's just see.
All right.
Okay. Profit margin.
All right. Well, they're doing 15% this year.
Yeah, but that's involving a lot. Even Elon Musk has said, guys, it's because of our big jumps in prices. We're going to pay for this in the future.
5, 7, and 9.
Let's go 5, 8, and 11.
Okay.
Because I just want to show people like 11 for a car company is still a very, very high number, guys. Bottom line profit.
Okay.
Free cash flow margin.
Should we do the same thing?
Yep, I think so. And look, they do have the free cash flow, 12%. Now, PE, Mo. Guys, remember, the PE is based on what's the PE in 10 years. When it's the largest car manufacturer in the world, one of the biggest companies in the world, everything. The potential for growth is not there at that point. So you have to keep the PE reasonable.
14, 16, and 18.
I love it.
I think 18 is probably a little bit high, but that's okay.
That's okay. And we'll do the same thing.
Based on the numbers we're putting.
Yep. And we'll do the same thing for price to free cash flow. Guys, the historical averages for companies is 15 or 16. The larger and larger the company is, the more it should be applied to the historical average. And desired return, Mo?
12.5, 15, 17.5.
I agree. Now, guys, the key here is this is basically your margin of safety because you can get 9 or 10% from investing in a long-term ETF, like it matches the market. So in order to get, you need to get a little bit more bang for your buck here to buy an individual company. And the higher your assumptions, the more margin of safety you should have, the higher desired return you should have. So please rewatch this part over and over if you have to. If you have our software, you should have probably done this before you did the software, before you watch this video. But if you don't have the software, this is so extremely useful for determining a value for the company. So check out everythingmoney.com if you're interested.
All right.
So analyze button.
190 current price.
So even on the 30% revenue growth.
So doing over $1 trillion in revenue per year.
With 11% profit.
And an 18 PE.
And an 18 PE, it's still not worth it.
Wow.
Low side of 20, mid price of 65.
Wow.
So I think most puts at 50 are probably a good starting point.
Yeah, and my other reasoning for that, I told you the other day, because you said, I think 50 is a little bit much. And I said, well, by the time this moves from 190 to 50, maybe it's worth 50 at that point.
Well, this factors that in there. So guys, thanks very much for watching the video. If you are a Tesla fanboy and you love it and you hate us, I get it. Leave a comment before just saying, Paul. Thanks very much. Don't forget to subscribe to our channel.